Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 20th of September. All right, now just be careful what you read here on some of these services like Metastock here. Dollar drifts higher as traders look to upcoming Fed decision. Well, that's true. It is slightly higher, but I tell you what, most of the day it was dropping, right? And if I just come over here and it sort of came back still below where it was at the start of the day. So news services are getting a little bit loose with their reporting at this stage. If anything, to me, just looking at the yields, okay, price is slightly up, so the yield's slightly down on the dollar, right? So that's going to take a little bit of pressure off the off the dollar going up at this point in time. Now, there's a number of other things to look at here as well. Now, some of you may have looked at yesterday's Market Insight, got a nice little scoop there on dollar CAD. Now, this wasn't for everyone, but it does show you that there is cash in the market if you know what we're looking for and know what the setup is, right? Oil going down, strong Canadian inflation numbers. You saw a drop from sort of the start of the day, somewhere between 60 and 100 points. And then with oil falling, okay, we saw that retracement, okay? You can have a look at yesterday's Market Insight for a better explanation of the whole move, and then compare today's markets where we did see some significant moves on a lot of these crosses, in particular Euro, which had a nice technical setup and a fundamental setup there as well. But have a look through that. It'll give you some, it's a great educational piece, I guess, if anything. Now, just looking at these markets, right, where we are at the moment, okay, the dollar, once again, this is most of these currency screens have been reset. The dollar's falling against most things. Right. And I like to have this profile where I've got the US dollar relative strength so I can see what it's doing across the board. Kiwi up, Aussie up, the yen up, CAD, well, it's a bit mixed, Swiss, probably a little bit up as well. But what I'm seeing is, and I talk about this a lot in the markets, right? This is all about patience, discipline, and control, waiting for that key pressure build up and then nailing it when it comes up. If we have fundamental releases that match that, right? And this is why we look at the calendar, and that's where we're going to get the key drivers. Now, today we have another great setup, right? And what I'm talking about, it starts with the technicals, right? So just looking at the technical analysis here, now we are starting to see a build-up. I was talking about this on Monday, right? And this is where we started Monday up here on the dollar index, okay? Dollar rallying. Now, since then it's stalled. I said on Monday, like the dollar is done. It's overcooked. Right, there's nothing coming out here that's going to get me to buy dollars at this point. If anything, we saw a bit of a dollar short squeeze on Friday and pressure on the downside of Euro, Sterling, not so much Aussie and Kiwi. And then with oil rallying, there's reasons why certain things are moving. Oil rallying pushes dollar CAD down. Now, so what am I talking about here? Well, when I'm looking at pressure buildups, this is a gut feel, right? I've been doing this for 35 years. I reckon Euro, Sterling, Aussie, and Kiwi have gone as far as they want to go to at the moment, right? Unless there's some major turnaround in the fundamentals, then we are going to see, like I can see these, like Sterling going up at least a couple of 100 points. Aussie back up towards 66.5, Kiwi up towards 62, and Euro probably back up towards 108, right? The pressure is building here, and you can see the price action where it's not only sort of just stalling, it's actually starting to rally. And you're seeing this on a bunch of the instruments, right? Aussie, if anything, the Kiwi, the smallest of the majors, leading the charge. It's already broken through resistance. What we need here, and this is where those second tier, third tier numbers can come into play. We just need the straw that breaks the camel's back. In actual fact, we've got something bigger than that. We've got UK inflation numbers. Now, to me, the consensus here around these numbers, if we see any sort of sign of a stronger number here, right? Consensus 7% year on year, the core inflation 6.8, month on month 0.7. Now, if the numbers do come out strong or even stronger than that, right, that's the straw that's going to break the camel's back. Sterling will shoot to the top side. It will go quicker. There'll be more volatility in sterling. But what you will see, okay, that pushes the dollar down. And what we'll see is a potential move higher in Euro, Obviously, sterling, Aussie should go with it, and so should the Kiwi. And I would expect the dollar index to fall, right? And in that saying that, dollar Swiss to fall as well. Like dollar CAD at the moment is doing its own thing, but that's what I can see on the technical framework here. We've got a build up of pressure. Now, just hear me out, because there is a trick to this, right? Because the situation may be when you get a big inflation number, right? And we had the Canadian inflation numbers yesterday, as I said, that printed on the high side. Oil prices are putting pressure on inflation across the globe. So I'm expecting a higher number here. But if we don't get the higher number, don't get all excited and think you're going to get these instruments to move aggressively, because they won't, right? We might get a little, if it's slightly just on expectations, right? We might sort of see it sort of just pop above. It'll diffuse things a little bit, and that's it. But if we do get the high print, that's where the trade is, right? We're focusing on the instrument that is the best trading instrument, right? To me, that's sterling and the sterling crosses. Outside of that, if sterling goes, well, then these other ones are going to go with it, right? That's just the way the correlations are. And it's primarily just because the way they're traded, or way they're quoted, I should say. Okay, so that's where the action is. You've got to be focusing on this. Don't go looking for trouble on other instruments that don't sort of matter much. In actual fact, what you want to be doing is just coming back before the releases and just checking what's happening, right? So if we do have a risk on profile in, say, the equity markets, right? Are we seeing that on the currencies? Absolutely. That's a triple tick. Once again, that supports a stronger number. It'll be an easier move topside, as the dollar is generally falling against most other instruments. The one and the Noki, the two odd ones out. Right, so that's what I'm seeing in the markets, guys. As I said, don't overcomplicate things. And if you are going to be rushing into, say, a potential trade here on sterling, just be aware. If you're placing pending orders in the market, they need to be at least 15 points away from the market, right? In actual fact, the setup here on sterling is a lot better, because you can take the pressure off yourself somewhat by placing a trade not only on the data, you might place them there, but on the break of resistance. It's only going to break if the data is strong. So that's the easiest, lowest risk trade area. Of course, you might want to get in a little bit earlier on the release. That's up to yourself, but that's what I can see there as well. If the number comes out weak, it's going to diffuse the situation, and we're back to like sitting on our hands, right? You don't want to be sort of just go, oh, that didn't work out, I'll just go and trade something else. That's like a bloodbath. Now, even if the sterling trade does kick into gear, let me just get back on the right screen here. Okay, so yeah, say sterling comes out, we get a high number, that's great. Well, let's just be careful here. We do have the Fed, right? And the press conference there at the end. No change expected. We'd expect, what I would be expecting from the statement, and this will be followed up in their press conferences. Yeah, we've got inflation's under control. That's great. But you know what? We're still watching it. If it pops up, we're going to crush it, tap it on the head again. If it remains weak, well, who cares? They've got to get back down to that 2 or 3% mark. And that's what you're going to do. So, but any central bank releases, you've got to be cautious around that. Okay. So, but I think it's not going to be neutral, but it'll be as expected. Right. So I don't expect any sort of significant dollar strength, right? The Fed have already told us everything that we need to know, right? And there's been no change of data. So to me, it's back to, okay, the dollar's got everything going for it. It can just drift lower there as well. So anyway, just be aware the Fed meeting, the decision, the statement, the press conference, and we've got these other gorgeous projections there to look at as well. Okay, guys, that's it for me. Just focus on what's in front of you. Don't go looking for trouble, right? If sterling is not one of your favorites, don't trade this release, right? And actually, have a look at the release, because you've got a technical setup here. If you're just learning what to do, watch how the number comes out, see what the consensus is, see if it lines up, see how it works technically, and then you can piece it together. So next time you can take advantage of it. All right, guys, that's it for me. Have a good one. All the best. Cheerio.